And welcome out to Tackle Trading's halftime report here, Monday morning, 1/7/2019. We got Coach Matt, Coach Tim, and we did even give him the title Coach Cody here, producing a podcast and our halftime show. Matt, how you doing this morning?
Doing really good, Tim. Excited to be here with the halftime crew for the beginning of the week to get people ready for the weekend trading. We got some fascinating things this week, and quite frankly, we got a really, really big economic week this week, Tim. We got our first central bank announcing monetary policy on Wednesday. There should be I'll say there should be a little bit of fireworks around that. There are some that expect the Bank of Canada to increase their interest rate, similar to what the U.S. has done. They currently have a 1.75% interest rate. The expectation is perhaps 2%. But a lot of evidence has pointed recently in the last 2-3 weeks for them to come off of that. And so we got a central bank announcement where we really don't know exactly what they're going to do. And so it's going to be interesting there for the Canadian dollar and the Bank of Canada this week. We also have a lot of manufacturing data, which the theme of 2019 will be growth, whether it's slowing or not. And we do have a lot of economic data this week. ISM non-manufacturing report came in today in the U.S. That came in at 57 point. Let me get you the actual number here, 57.6 versus the expectation of 59.6. So a slight reduction in the ISM non-manufacturing report coming out of the U.S. today. Nothing to be too concerned about. It's not anything above 50 is an expanding economic indicator. But couple that with China last week coming in under 50, couple that with a real big miss on manufacturing data out of the U.S. last week, couple that with Apple and Delta showing us a little bit of concern about growth, specifically there in China, and how the U.S. and the Chinese are handling that trade war. You couple that with industrial manufacturing data coming out of Germany, France, Italy, and England this week as well. And yeah, you got a fairly big week, and we haven't even talked about the Chinese and U.S. delegations negotiating on the Chinese trade talks just today and tomorrow, including the chief negotiator that came out of China. And then the last thing, Tim, Brexit. Brexit has another vote there in Parliament next week. So big week. And I don't even think I got them all, but that's it's a big week economically.
Well, and there's a lot coming down the pipeline even after this week, as earnings season for most of the S&P 500 companies does kick off next week, and then we're going to get hot and heavy into that. So a lot going on in the month of January here, Matt, and the markets are showing some strength here today. We're going to break down all of the analysis. If you're out there watching the halftime report, welcome. It's good to have you guys here. Make sure that you subscribe, like, and share our halftime report so we can get the word out for Tackle Trading. And on Monday, Matt, we always do our market prep where we go through every sector. We look at all the different indexes. This is kind of what we've designed here for. Yep, that's right. Let's get right down to it. Here's the thing, and we were talking about this pre-production, Matt. There's not a lot of resistance for another 30, 40 points on the S&P. Now that's only 2% up, but even into 2620, 2650, I could see more room upward here. Do you trust that signal?
No, I don't trust it from a swing trading perspective. Obviously, for the market, you're still in a bearish downtrend, Tim, overall. But if you're a bull, you're starting to feel the psychology of the market turn around a little bit.
Mm-hmm.
I mean, a lot of the news coming out over the last week and a half has been maybe not the news economically, but the news coming out of the market has been bullish. We've had a few big days in the course of the last couple of weeks in the market. But on Friday, once you started breaking up above and the euphoria coming out of that, the Fed speech with Jerome Powell and the three-judge panel, I keep calling it a three-judge panel because I keep thinking like that. But I mean, the euphoria coming out of there was you can't deny that, T. And then today, even on some degree of negative news, the market is still buying into that. And maybe we're back into the, bad news is good news type of market environment. I wrote about that in the Forex report this week. But I mean, the simple reality is once you closed above that 2530 barrier, it was obviously the next step was 2550, and then that was the subtle resistance. But 2600 has to be the target here on the S&P 500, and I'd be a little surprised if we don't see price get up into that 2600 range. I think that's the ultimate decision for the market, to be perfectly blunt with you, Tim. I think last week that trigger that we all had on the bearish retracements kind of frustrated us, no doubt about that. But the ultimate test is that 2600 T. If you can get the market above 2600 on the S&P 500. You got to talk buying situations, and you got to talk reversals, and you got to talk potentially switching back into a neutral or a slightly bullish capacity. As of right now, I'm still slightly bearish. And when I mean slightly bearish, I mean slightly bearish on the market.
Yeah, my posture's right there with you. I think we could probably, have a little tiny bit of a gray area, but we're almost in line with that. -35, -40, somewhere in there on the heat map that we usually do on the newsletters, kind of where my personal posture is. And the only reason, Matt, is that we still have a lower pivot low and a lower pivot high, and all the problems we had in December. Snapback rallies happen in bear markets until they break resistance technically. I can't change my posture, just I have to trade
systematic.
Yeah.
You have to be systematic. And so as long as that pivot as long as 2,600 holds resistance and support has not certainly been cleared yet, then we got to be slightly bearish in the market.
Well, and I was talking about this today as well. We are acting like these are really, really big days in the market, Matt, but the ATRs are so high right now. We're just in line with what the market expectancy is. You're going to get wild movement. You're going to get wild volatility for the entire month. Now, that is up and down, in my opinion. And so just buckle up and get ready for it. You should plan accordingly.
Yeah, we're talking the ATR on the S&P 500 right now at a ridiculous level, Tim. We're talking 79 points.
Yeah. This U.S.-China trade talk is making some progress here in the last 2 days, Matt. It's been the theme of 2018, and now it's starting to take over also in 2019. Do you expect this deal to get done by March 1st?
No,
I don't really see it either. A lot of posturing back and forth.
You could have some positive news coming before March 1st, right? Mm-hmm. But some of the more important things that the U.S. cares about is intellectual property protection. Mm-hmm. And that came out last week with Apple as well. And you saw some headlines about maybe Chinese still in Apple IP. So no, I don't think that gets done. But could some of the smaller deals get done? Absolutely. Mm-hmm. I do expect, and that was a prediction in the prediction podcast from last week. Do we expect the Chinese U.S. to have some degree of trade deal done? Most of the coaches said no, but I said, I kind of split the middle there, kind of cheated a little bit and played little lawyer tricks, but I do expect some deal to get done. But does that mean that a broader, complete Chinese trade deal circa 1971 gets done? No, I don't think anything like that.
So here's the story of the day to make you feel old. Mattel, the toy company, is the top gainer on the S&P 500 today. Matt, MAT, if you'll bring that chart up, let's go through a couple of these different companies. And they have a huge rally going on because they signed a deal with the international boy band called BTS. Now, do you know any of the BTS songs?
Yeah.
Is that what you're rolling with? Obviously, I don't know who they are. I saw the news and I'm like, holy cow, I feel old. Of course, I don't know who that is, but the market likes it. They're up, 6-7% here today, running off the bottom. That's a W breakout, Matt, with a little bit of momentum, but still weakness in the long-term trend. You're going to see a lot of charts like this as we go through the different markets. Another one that's showing a lot of strength on the S&P today is AMD, one of our favorite dirty, sexy money kind of stocks, and it is running again.
That's a breakout.
Yeah. Obviously there's different levels in here. There's 21 at that old pivot point back in October, November. You've got the resistance at 24 as well, but that just broke out of a pivot and cleared the moving averages, Matt. Real strong move there today. And chip makers across the board are actually showing a lot of strength on that. Micron is up as well. And Applied Material.
Very quickly, T. We came very, very close to putting that on the scatter report.
Mm-hmm.
Very close. It was just, we didn't trust this short-term reversal, but obviously we also didn't know they'd be partnering with a major boy band.
BTS. I'm not sure who that is. Who's the best boy band of all time?
NSYNC. Move on.
You still got the Christmas album. Oh, goodness.
I wasn't touching that one, bro.
Put that one on Twitter, Cody. Matt says NSYNC. I like it.
No debate.
I agree, Matt. I'm with you the whole way.
The Beatles are the best boy band of all time. Thank you very much.
That's actually a good answer. Chesapeake Energy, and a lot of the energy stocks are actually going back up. S&P 500 components, CHK.
I'm still not changing your answer on Twitter. It's going, Matt said NSYNC.
NSYNC and then the Beatles.
NSYNC greater than the Beatles. I said it. Move on. Energy
is actually showing a lot of strength here today, Matt. Obviously, the oil prices we're going to get to here in just a minute, they are up as well. One company I want you to take a peek at is Dollar Tree, DLTR. It's up 6% today. One of the S&P 500 leaders. We've had this on the scouting reports a couple of times on his breakout. It's now hitting some of the targets. Beautiful move.
It is an absolutely beautiful move on Dollar Tree. There's no doubt about that.
Yep.
It's been on the scatter report a couple different times. We really like the reversal off this weekly channel here, coming right at that $80 mark. Very, very good evidence of old resistance now equals new support on that weekly channel. And then once it gets back up above this barrier here, right? Once you get back above that, that's an easy breakout. Very similar to what we were talking about last week on Toll Brothers, Tim. Tremendous bearish downtrend, obvious reversal pattern galore here, increasing support levels, horizontal resistance levels. Once you break out of that, that's an easy trigger back up above that level as well. Now, you do have this 200-day moving average. If you were swing trading this breakout, you got to be concerned about that. But if you're cherry picking the bottoms, this is what cherry picking the bottoms are, Tim. It's not buying stock as stock goes down. That's not it. It's not buying Goldman Sachs simply because Goldman Sachs is down 40% year to date and it's getting slaughtered. No, you wait for the reversal, you wait for it to slow down, you wait for it to confirm, and then you get in. That's what you do. Patience is the name of the game when it comes to trading.
Top loser on the entire S&P today is PCG. Obviously, they have had some bad news the last 3 or 4 months. Pretty bad news the last 3 or 4 months, and now they're looking at potentially bankruptcy, Matt, if a lot of these lawsuits do come through, and that's what would happen. They're down 21%. PCG, it's just been untradeable. Untouchable.
Not touchable. And I read a report that after the initial volatility came out, Tim, and I don't know who said it, but it was an official in California or for PCG. I can't remember, so excuse my ignorance on that one. But they basically stated that there was no bankruptcy and that this was nothing to really see. And there was a lot of big time hedge funds that came in and bought those dips, Tim, and just got absolutely pummeled for it. When you see these types of things, you don't catch that falling knife. I don't know how many times we have to say it. You do not catch a falling knife. I don't care what the news is. This stock is unplayable, untouchable, and should not be looked at.
For traders.
Now, Tim, if we start to see some evidence on PCG come out, because there's a lot of smoke, not a lot of fire, sorry for the bad joke, but in terms of that, there is a lot of smoke here. We don't know exactly what's going to transpire. So maybe we look at it after we start to see this come to fruition. But right now, no. I mean, Tim, would you rather pick up PCG on a negative news or Toll Brothers breaking out or Dollar Tree breaking out off a reversal or so many other different, better opportunities out there right now?
Of course. And obviously, when a utility company doesn't pay a dividend, they're facing bankruptcy. Trade what you see, guys. And I think it's a complete stay away. That's my opinion. I think that's what you've said as well, to confirm. Just kind of until you get more evidence. I love what you said there just a minute ago. Until you get more evidence. Bring up NDAQ, if you will, Matt. The NASDAQ, actually, their symbol as well. Maybe the news of the day for traders. Did you read that the Wall Street firms, Morgan Stanley, Fidelity, Citadel, and a bunch of others are going to form their own stock exchange called MEMX, the Members Exchange, and it's going to compete with the New York Stock Exchange and the NASDAQ for processing stock transactions. Very interesting news, in my opinion. Competition in that market could be lower fees for consumers. But I'm always, my guard's up whenever I hear that Morgan Stanley is creating their own stock exchange, Matt.
It's Citadel.
Yeah.
Citadel, the number one high frequency trading system in the world, the number one algorithm, processes more trades than anybody in a fraction of a second. I'm very concerned about that. And then you have, I don't know what's going on with Tasty lately, but they're in some type of trying to create some small exchange or something. I got to look more into that one as well. Competition is never a bad thing in my opinion, but I don't see how anything in terms of what you just said alleviates one of my biggest concerns moving into the future, and that's how algorithms impact trades.
Yeah, I agree with that. And in fact, probably the big concern would be if these brokers are setting up their own rules within these exchanges and they allow dark pools to come in and trade them the same way that consumers do.
But we have the SEC, Tim. We have the rating agencies.
Oh man, I'll tell you, if you read the logs of some of their discussions about high frequency trading, Matt, they don't, one, understand it most of the time. No, and number two, they don't even think it's a bad thing necessarily. So yeah, we have the SEC.
The SEC doesn't understand options.
They're not.
Whenever they were talking about derivatives and how terrible, and they were talking about options, they have no idea what they're talking
They
about.
don't even know what a derivative is.
Yeah.
It's the blind regulating the algorithms, and that's never going to work out. So I don't know. We'll see how all that plays out too. But I'm not. My blood's not getting too caught up in that one.
You're not getting worked up. One of the biggest moves here today, Matt, is going to be a NASDAQ company. And let's move on to the NQ next, and then we'll talk about some of these tech
Very
firms.
quickly, unlike and I do want to make a very quick point on the NASDAQ here.
Mm-hmm.
Unlike the S&P, which is still below its pivot point, unlike the Russell 2000, which is playing catch up right now, but the Russell 2000 is still below its pivot point. The Dow Jones still below its pivot point. On the S&P, the ultimate pivot point is easily 26,600, right there. That's your ultimate pivot point. On the Dow Jones, your ultimate pivot point is right here between 24,000 and that pivot at 24,200. And then on the Russell 2000, and again, playing a little bit of catch up over the last week and a half, 2 weeks, but that pivot point really isn't into that 1435 barrier all the way up to the ultimate pivot right there at 1460. So you still have room for these indexes to kind of get up into there. But unlike that, Tim, I want to look at the NASDAQ very quickly. Here's your ultimate pivot point right there at 65,000. You're currently, 6,500. You're currently at 6,527, breaking back up above that. Does that impact your bias to the NASDAQ in relationship to the other indexes?
Well, in most markets, when the market recovers, the NASDAQ's going to lead. And so from a technical perspective, I have more concern about where we are right now, NASDAQ wise. I mean, your pay range up and you're at an old pivot point. So if you were just reading the chart without any other expectation, no idea of market analysis or market rotation through different sectors, you'd say the NASDAQ is set to hit its head the first and maybe turn itself back down. But then you could make a counter argument. If it breaks through the support there, Matt, it might be the first to lead its way back up the chart.
Well,
and so
I think that's the argument here.
Yeah.
It's not that it's the first to hit resistance and turn around. It's the first to like snap back above that resistance level. But if the S&P hits its head at 2,600 and turns around and starts selling off the 2,600 resistance level, the NASDAQ's going to do the same thing.
My guess is when we come back a couple of months from now, we're probably going to see market patterns, Matt, that took some time to chop themselves up and down, and where they ultimately head will be a result of the earnings season. Right now, so much of the action since we started the year coming off the bottoms has just been bullish action. But I've been watching light volume days, a lot of basically straight up the chart on the intraday. If you break that down into like a 5 or 15-minute chart, Matt, we open the day and then we just run. It's not like there's a lot of day trading ranges during these last few days and the market just takes direction and kind of just takes off. And so it's hard to say that you're going to hit your head and stop here when we've been going straight up all morning long. You could easily just drift upward as we continue to fade higher on the chart.
Yeah, it's forming a little bit of a high base intraday type pattern on the entire market. It's something I've seen recently. It's a good breakout when you have a high base off a bullish movement or low base off a bearish movement. It's a good breakout pattern.
Yeah, interesting action across the board, in my opinion. On the NASDAQ here, Matt, a couple stocks that are really running. Netflix is one of them, up 5.7%, and Ulta Beauty, also another one, up 5.5%. These are the examples, the kind of charts that would lead the index higher if it did break and run. Netflix broke 300, took off. Here we're at 313, almost 314 on that price. You don't really have another stopping point till about 330. It looks like
no,
that
you're above 300. You're not bearish any longer. You're not looking to short Netflix in any capacity right now.
Yeah, that's right. Earnings coming up here in a couple of weeks.
As it's turning here, and I just want to make a point real quick. As it's turning back up into these resistance channels, Tim, at no point did Netflix confirm on a trade. At no point did they confirm on a trade. Once you got back up above this one, now that trend is now starting to get over. You make an argument for neutrality, as I made on Friday. You get above 300? No. That's bullish now, T.
Yeah.
Above that pivot point, that's bullish. Now, you're not chasing the dragon here, but what you are now waiting for on Netflix is that first retracement to pound that first retracement.
ULTA, another NASDAQ 100 component, big stock, one of Coach Noah's favorite companies, upgraded at Citigroup. And you've got a V-shaped pattern there, Matt, that just broke resistance and the moving average. Not really new tradable here when you've got all kinds of pressure on top of you, but that is an impressive move. There's no doubt about it.
Yeah, I don't think this is viable until it gets back up above 288.
And then maybe for me, the move of the day is Roku. And we were talking about this.
Yes, beautiful moving on Roku.
24% from the bottom here, Matt, just on some news that they had better streaming data than what people thought. Their active accounts jumped up to 27 million, up 40% compared with the same time a year ago. You've got to say that's impressive. There's no doubt.
Is this a company we need to start watching though?
Yes. Yeah. Yeah. If you break 45, 50 and you develop into a new trend and the market does recover, companies like this, and just off the top of my head, companies like Square, companies like CRM, that they're at the bottom there for a while. I think they're going to be very attractive.
I'm not touching it yet, but
No.
my interest is piqued.
I think it's a watch list candidate. You don't buy a stock up 24% in a day, obviously, for that. You don't chase that action. But
you take the gift of the trading gods and you lock in profit off the 77 to 26 movement in the last 4 months. So let's not.
Are we not missing out? But
we're always
missing out.
FOMO, baby. We're always missing out. But there's always an opportunity in the market. There's always a trade in the market. So you should never fear missing out on anything because there's going to be new setups tomorrow. That's why trading is so amazing, guys. Yeah. Is that for every opportunity you miss, there's a million that you didn't ever even see that you missed. So just accept it, move on. To me, with Roku, this is a very volatile company, a very volatile company, growth-based all over the board, no doubt about that. Just in the last year, we've seen the market go from 30 to 77, back down to 26, now back up to 41. I know, unless you're an aggressive trader, you're not looking at this company. It's too volatile, too fast either way. And for a trade signal to happen here, I honestly, I'm trying to vision out the next month, guys, and I'm having a hard time finding a trade signal there.
Maybe a break, run up, hit its head, earnings.
It breaks, and I'm just going to make an argument that the RSI is overextended, and it's moved up 26 to 50 points. It's literally doubled in price, and are you really going to chase that dragon after it doubled in price? That's not great investing 101 after a stock doubles in price in 3 weeks.
Yeah.
No, so again, I think it's definitely put on a watch list and watch it to see if something does set up, because if you get something right on this, you're talking 10, 15, 20 points fairly aggressively. So to me, it's still a stay away, but maybe put it on a watch list.
A standard reaction, I think, is what you just said. Watch list it and start keeping an eye and maybe do some research and come back to it when you finally find a pattern that's tradable.
I will tell you, my interest did not get peaked to the point where I'm going to start watching this daily.
I don't think I'll watch it daily, but I'll put it on one of those lists where I kind of check it every week. Yeah. Let's move on to the Dow, if you would. Blue chips generally are not going to lead on a day like today. We're actually seeing small cap leadership today, not the Dow. But the Dow's got more room up, Matt. 23,617 here. We got till about 24,500, don't you think, to that old support point?
No, 24,000.
24,000 even.
I got to give it 24,000. Now, technically, it's 24,200. So, yes, it's 24,200. But significant whole numbers have played such an important role in the market in the last few months.
Yeah. Leaders on the Dow here today, kind of tell you something. Home Depot, Visa, Nike, Walmart, and Chevron. Those are consumer companies, financial companies, and then obviously the energy company. Laggards on the Dow: Coca-Cola, Apple, Procter & Gamble, Merck, and Johnson & Johnson. The consumer staple, consumer good type companies that we're fading on that. Interesting, Coca-Cola down 0.8%. You would expect a little bit more, movement out of Coke, but not quite. Home Depot coming off the bottom.
Not a big safety day, I would say, today.
No, it's an aggressive day for sure. Yeah. In fact, the advanced decline line paints that. On the S&P, we're 450 to 50. So 9 out of 10 stocks are going up. On the Dow, we're 26 to 4. Johnson & Johnson just flashed into the green. So now we're 26 and 4. NASDAQ, 9 and 10.
Home Depot, for example, T. Mm-hmm. Okay. Big movement to the downside over the course of the last 3-4 months. But especially the last 2 days, don't you have to move Home Depot back into neutrality? You're not looking to short Home Depot anymore, in my opinion.
No, but a break below 168, you would.
I don't know if I would.
It's tough. You're right. listen, the patterns are changing when you see upward movement like this. I don't believe the market's going to shoot right back up and go bullish. If it does, I will respond to it, hedge, adjust, and put on new trades. There's no doubt about it. And I am taking bullish trades, by the way. There's a couple of Tackle 25 stocks that flashed good signals, and I wanted to get into covered calls for them. So there are bullish opportunities in the market, and that's why, you have your posture, you have your balance in what you do. Home Depot, that's incredible strength. You're not going to short that. No, you would not.
We had about, I'd say on the scanner reports, the stock report had about equal number of bullish trades versus bearish trades potentially.
Yeah, I agree. Walmart, Chevron also going back up. I like Walmart as a potential buy at some point here in the month of January or February. Where it's going to be, I'll have to see a pattern I like to trade. It's a kind of a wonky pattern, almost like Home Depot, where it went down, came back. Now you're more in a neutral range on Walmart instead of bullishness.
Let me say something regarding scatter reports real quick.
Mm-hmm. Yep.
On those bearish retracements on both the stock and the options report, when you have an up day on Monday, you need to update your triggers and your stop loss placements. Targets don't change, triggers and stops do.
Yeah, I agree. I think it's important to learn those mechanics as the market develops and as your chart develops. You're going to update triggers and entries.
I just quickly went through every single one of those stock and options report picks, and they're all still bearish retracements. You just got to update triggers because they haven't confirmed. Now the confirmation is going to be different because of today's closing price versus Friday's.
Sure. Oh my! Looking at these moves across the other indexes, Matt. Maybe the move of the day is the dollar sign DXY, if you would. There's a lot of Fed testimony this week.
It's the most important move of the day so far.
Breakdown of support, major support.
Yeah. And I had the dollar at a -40 coming into the Forex report, Tim. And in the report, I said that's because we're sitting at support and neutrality, anticipating a breakdown. This is confirmation of the breakdown. Now, whether or not we get whipsaw or not, the future will tell. But this is confirmation of a short-term bearish breakdown on the dollar. I expect the dollar to depreciate in price over the next week and a half, 2 weeks. We'll see. But there's a lot of economic reports that could impact that. And I'll tell you what I told Cody last week. You can't be in a currency trade for over a day right now. There's just too much overnight. There's too much economic reports, but there's some good opportunities right now in the currency. You're looking at potential reversals on the pound. You're looking at potential reversals on the euro. You're looking at a potential whipsaw reversal on a V-shaped reversal on the Canadian dollar. Japanese yen reversed 4 weeks ago, and you look at maybe some profit taking there before you get back in. So, but with the dollar now short-term slightly bearish, we should see some trends start developing the currency market. But this is the most important move of the day. I mean, the market's just kind of fading into resistance right now. This is a break of a short-term support level, not a major break, but the projection's got to be down to 95, maybe 95 and a half, 95.
Listen, the most important move of most days is in the dollar. The currency market's just a bigger market internationally, and it's more important for the economy. I saw the ISM report come out a little bit softer than was expected, but then I looked at all the economic calendar, Matt. We've got tons of Fed testimony throughout the week. You've got some earnings coming up. You got jobless claims later in the week. You got CPI data. This dollar, index obviously is going to be moving, but there are some currencies that are flashing signals. And I just don't trust them yet. The pound is showing me a little bit of strength, but I'm not going to buy the pound when they're still trying to figure out Brexit. I'm not going long pound.
Yeah, especially with the parliamentary vote next week. You don't do that. But keep an eye on right here, 95.70. You got a movement to the downside on the dollar index. This is a descending triangle formation when you have nice little, let me get this here. I got the wrong drawing tool. Mm-hmm. So you got a nice little descending resistance level, very consistent. Into that, you have a horizontal support level. That's an easy trigger underneath that low.
Mm-hmm. Yeah, I'm looking across the commodities now. When the dollar fades, you would expect commodities to rally. And we are seeing some strength in some key areas. There's no doubt about it. Crude oil up 2.7%, biggest commodity in the world. We'll come back to
that has nothing to do with the dollar, though.
Yeah.
Crude, and I've made this argument for the last year and a half. Crude is decoupling from the dollar.
Mm-hmm.
It just is, and that's there's a few reasons why economically, but when you start to see Saudi Arabia sign trade deals with non-U.S. countries using non-U.S. dollar transactions, that is literally the death of the petrodollar happening before your eyes. And so, even though crude is still heavily priced in dollars around the world, you are seeing a decoupling of that. And I don't believe crude has to go inverted to the dollar in any capacity any longer. Now, gold and silver, I still think those are in unison, or excuse me, divergent. But no, crude can do whatever it wants.
Yeah, and there's still some very key levels on crude that it has not broken back above. Until light sweet crude is above 50, there's nothing there. In my opinion, it's bearish retracement. Cody said it really well earlier when we were talking about it. Now, you do have, it is one of the more impressive moves it's had since it went into bear market territory, Matt. If I'm counting the green candles, that's 5 in a row, so I've got to give it credit there. It's showing me some strength coming off the bottom. But that 50 level where we were hitting support, that broke down, that's going to be in play here very, very shortly.
Well, yeah, it's been impressive, and give me a doji and let me short.
I agree with that. Crude light, moving on to gold. Actually, gold is coming in on 1,300. It just wants it. It wants to test it. Everybody trades gold.
It's profit taking.
Yeah. And so do you think that we're going to hang out up here for a while? Time correction? Could you see a little bit of a pullback?
I'm not in anything right now, and I'm not buying anything right now. Okay. On gold or silver. I'm waiting for one or two things. Okay. Number one is a retracement back down into support. That could be 1260. That could be a rising 20-day moving average. That could be a lot of different things. Number two, a high base where the 20-day moving average catches up to it. Okay. And then that's followed by a very, very easy trigger with a breakout of 1300. So until those things happen, I'm just hanging out.
Yeah. It is a doji hangout party there, Christian, in the chat. That reminds me of our scouting report planning.
What was that? What do we call that?
Doji party.
Doji hangout party. And what that means is you still need an update coming into resistance. You need your doji, the hangout party when you have the doji, and then you short it on the confirmation the next day. I can't remember what I said on that stock. I can't remember what the stock was.
I can't remember either, but there was a couple where they
I said, no, too early. It's got to go up one more day. You got to give me a doji, maybe hang out and party a little bit, then a downward movement in price on Thursday, and then we'll short. And it became known as the
It might have been Devon Energy, DVN, because I know we were talking about that one.
It could have been Devon. It definitely could have been. Yeah. Yep. I said, okay, it needs to get back one more day. Then you give me a doji party. Then you short on the next day.
That's right. Oh, if that comes down to the way it plays out, that'll be interesting. By the way,
be epic.
It would be. And you know who called the end of the Bears game yesterday? 2 quarters before it happened was my brother Mark sitting there watching it with me. He's like, you watch, this 2-point conversion is going to miss. It's going to come down to Cody Parkey at the end, and he's going to break your heart. And literally it played out exactly like that.
Sorry for you, bro.
Happy about it. Yeah.
Me and Kat were watching the game. We were cheering. We were so sad for you. And first and foremost, Cody Parkey, he's an NFL kicker. He pays good money. That ball was tipped. So before you Bears fans go and bury him like you have done in the past, Chicago, looking at you, give the young man a little credit.
Yeah.
Give him just maybe not bury him. I watched some guy coming out of it was on Twitter and somebody had retweeted it. I forget who it was, but F this Cody Parkey, F this Parkey, F this Parkey, F you Parkey. You're not welcome in Chicago, Parkey. Get over yourself, Chicago. Come on. Let the young man live his life. The ball got tipped. Get out of here.
Well, it's like anything in life. There's always a few people that are the loudest. Whenever you're in a stadium and you hear boos, I literally look around and I'm like, there's only like 10% of the people booing.
There wasn't 10% of the population booing Cody Park as he was running off the field last night. I'll tell you that, bro. That was loud.
No, they weren't happy with it. I mean, listen, I get it. You're a fan. You're emotional. It is what it is. You move on.
Listen, I don't like kickers. Not like nobody else in the NFL likes kickers. Okay. Yeah. Get rid of the kickers. I'm okay with that. But just don't bury the young man for getting a ball tipped. Although the double doink, bro. The double doink. Oh my God. You had a split second there at the very end where you're like, did that hit the crossbar and go in? I know you did. You had that. And then you saw the refs and you're like, oh shit, maybe they got it wrong. I know you did.
Right.
Yeah. I'm sorry, bro.
It is what it is. I'm already moving on from it.
I'm just going to say this one time to you. Yeah. I love you, bro. You could be a Dolphins fan.
Well, I got the hat. I still have the hat up here. I was going to bring it over to you and give it to you.
It's still the ugliest hat you have in your house.
Well, yeah, I didn't design it. Oh, looking across the other commodities
Yeah.
here, Matt. Natural gas is down 3%. It must be warm today. I'm not
Hold
sure.
on. Hold on. Yeah.
Sun's out.
No, but the snow's melting a little bit.
I've called this fundamentally untradeable until I see more stability, a more normal price action. I'm not touching it one way or the other. I
Not
do
yet.
like the opportunity. We say it every day. I love the opportunity at some point for UNG for a core position hold, long-term investment, but not yet, Matt. It's too random, too volatile.
You can own UNG, right? Covered calls on it, and you can do that, but no, it's too crazy volatile right now. Even though it is slowing down last week,
Yeah.
amazingly, it is. I mean, if you want to just take a nice little peek at the ATR here, it is slowing down, bro.
Mm-hmm.
Okay, but just to remind you, this is normal volatility. This is what NG has been doing. So you are slowing down the ATR, and I can't say that on the market, by the way. The market's still crazy volatile, but you are slowing down a little bit on natural gas.
It may become more tradable here shortly, but I'm still seeing some pretty good price swings. It's just that ATR was so
I don't
crazy.
think it's tradable, but I do think it's investable. Is that a word, investable?
I think so. Yeah. If
It's just
not, we can make it up. Yeah, we can make it a halftime. We need our own glossary.
I'm 41. I know I don't speak perfect English. I speak American. I speak Utah. I'm okay with it.
All right. All right.
I had a speaker trainer one time tell me, "Hey Matt, you need to work on your language skills." And I looked at him. I said, "F you. How's that for my language skills?"
Do you know where I'm from?
Do you know where I'm from? I'm from Cole County.
I'm from over that mountain, and I walked.
Yeah, I walked.
Oh, goodness. Monday is our prep day here on our halftime report, by the way, guys. We're at that time where we're going to start breaking down the sectors, the economic calendar, kind of run through everything fully, Matt. By the way, this point, I always ask for a quick share and a like. We've been doing great with that lately.
Do yourself, buddy.
Yeah.
Get out there. Beg for it. Get your likes.
I ain't going to beg nobody.
Beg for it. Beg for a like.
There's your grammar right there. I ain't gonna beg nobody.
I ain't begging nobody.
We are cut from the same cloth, my friend.
Yeah.
Break down all the different sectors one at a time, and at one point, give me a peek at the economic calendar, and let's kind of look at everything there as well.
Yes. All right, so let's go through the aggressive sectors very quickly, Tim. Coming into the scout report meeting, I was pretty bullish on discretionary. I liked these sectors that were getting back up above its pivot channels. Discretionary had closed above its pivot channel on Friday. Good price appreciation that we're seeing here today. It's now right in the middle of your range. I do have a neutral rating on consumer discretionary. It's not tradable. Investable is a different category, but it's not tradable simply because we're seeing price go back up above it. You do have these very, very important resistance zones right there at 110 to 112. I did like it, even though I did like it because it got back above its pivot, but I also liked it because that pivot happened at $100, and that just gave it a little bit more credence to me. So keep an eye on discretionary and those discretionary stocks. That is a sector that was bearish. I do have it now. I think we had it at like a -40 on the in the report. That is obviously a neutral rating at this point, though, with the price appreciation it had today. Looking at your energy sector now, obviously it's doing good along with crude. Crude here today. Shout out to Coach Gino, by the way, who had the energy as his sector to watch in 2019, and it's starting out the year pretty good so far. But overall, I still have this as a slightly bearish sector. To me, you're now coming into a little bit of a trend line here, but you're still underneath these pivot points. And because you're still underneath the pivot points, you definitely got to give that a little bit of a slightly bearish rating just to kind of show you the trend line here. You got a couple of them. First one you got is that one right there. So as you can see, you're kind of coming into that trend line. And then you have another trend line right into that range. Right there is a cluster of moving averages. So keep an eye on those levels. And you're really talking somewhere between 63.25 and ultimately somewhere around 64, 64.50 on energy. But I am still slightly bearish on the energy sector. Technology, keep an eye on technology here, Tim, because you're smack dab right at the old resistance pivot. If you break out of that, you could see a run very similar to what you saw on discretionaries. And so basically you're kind of sitting on, if you want to look at discretionaries compared to technology, think technology, this is like it was discretionary on Friday, and then you closed above that level, ran up into the 50-day moving average. You're right there in that pivot range here, T. So you got to give that resistance level 62.5 up until about 63.5. That's your dollar resistance level on technology, but keep an eye on that. The next aggressive sector is industrials, very similar to that of both, maybe not so much energy, but consumer discretionary, closed above its short-term pivot, but underneath its ultimate pivot here at 67.50. So keep an eye on how this index performs at that 67.50 range. This is still a short-term bearish downtrend, and in my opinion, because I don't consider this a historical pivot, Tim.
Mm-hmm.
If I considered that a historical pivot, the analysis would be different. But I just do not believe you can have a one-day pivot. It's my opinion. Can't have a one-day pivot. I don't care what the algorithms do. So I see this as one movement back up into resistance, still slightly bearish on the industrial. Basic materials wanting to turn, feels like it just wants to reverse here. This one to me is going to play some catch up, and very similar to what we saw in discretionary. Got back above its pivot. I am now neutral on the basic material sector. Communication, Tim, for the first time in months, you're starting to see some real bullish activity coming into communications. And those are your Netflixes, your Googles, your Facebooks and your Twitters and those types of companies. Your trend line that you want to kind of focus on here is this trend line right there, T. So that's kind of your trend line that you really want to focus on. But you did get back up above its pivot. It did have a deep retracement, and let me show you the Fibonacci retracement levels here, T, because I know how much you love the Fibonacci. But you're now getting into that 61.8 barrier, which as you get back above that, you got to stop. You got to okay, let me put it like this. You got to stop looking for bearish retracements at that point, in my opinion. So you got to stop looking for those. It's a different pattern. I'm coming back into slight bearish, maybe a little bit of neutral on that one in the communication sector. And that's the first time we've said that about the communication sector in months and months and months, Tim. So you are seeing good bullish behavior coming into the communication, unlike you've seen in recent history. Looking at the next one, financial. Still underneath its pivots, slightly bearish in its bias. Resistance right here. There is no real trend line to compete with here. Resistance is the historical pivot at 25. If you get back above 25, you're talking neutrality at that point as well. But until that happens, I'm still bearish, and I'm still looking for pivots in the financial sector. But I'm always looking for resistance pivots in the financial sector. Onto your defensive sectors here. First one, healthcare, Tim. Healthcare retracing right back up into its pivot channel at 87. You also have the 200-day moving average, which the market has not seemed to care about in recent history, but you do have that 200-day moving average at 87.50. I got resistance right here where the market is currently at, between 87 and that 200-day moving average. If you break up above the 200-day moving average, you got to go back to neutral on healthcare. And there's some good bullish picks in healthcare as well, as if the market does start to confirming. Your next defensive sector, real estate here. Real estate, to me, this is still bearish. A lot of movement to the downside. I would not be a buyer here on real estate in the short term in any capacity. I'm actually very concerned about the housing market, real estate, home builders in general. But if you are looking to trade this in any capacity, it's got to get back up above its 200-day moving average first. And then last and certainly not least, utilities. And utilities is neutral with potential bullish activity above 53.
To start the year, Matt, and it is a brand new year, obviously. We're only 7 days into this thing, and I'm looking at the best performing sector so far since January 1, energy against the S&P 500. Communication services is 2. Discretionary, materials, industrials right behind there, and financials coming off the bottom. You've seen weakness.
Aggressive.
Yeah, and you've seen relative weakness in real estate, utilities, and healthcare.
That's why it feels like the market's turning a little bit. Is because you're finally starting to see buying come back into aggressive. Most of the buying has still been in defensive, but this is the first last week where aggressive sectors have done well. Now, a lot of those aggressive sectors are still underneath its pivot point, so keep an eye on those. And we're not bullish in any capacity, even if you go back up above 2,600. I mean, day traders would be bullish, swing traders would be bullish, but I'm talking from an investing perspective. An investing perspective, T. If you want to give perspective, you got to switch this out to a weekly chart. And looking at the weekly chart, just because you break back above 2,600 doesn't mean you're bullish. It doesn't. You got to have pivot highs and pivot lows. And if you break up above 2,600 on the weekly chart, you don't have a pivot high until you start breaking out of 2,800 and maybe even an argument of the all-time high at 2947. So you got a long way to go for bullish behavior from a weekly perspective, okay, in terms of that consistent bullish uptrend, higher highs, higher lows. But from a short-term perspective, day traders are already bullish. That's number one. Swing traders are starting to get bullish. That's number two. Position traders won't do anything until we start breaking out of W patterns or 52-week highs.
If you look at things like the total volume on the indexes, Matt, this is not a lot of heavy volume. It's average volume going back up. I'm not trying to say that it's not.
None of the volume has been as much as the sell-off.
Correct.
None of it has.
That's right. And the other thing is using even like advanced decline lines and even like the old ARCA high-low indicator, we are seeing some bullish activity. Things are flashing. But until I see some of these other areas break and put in a new pivot.
Can I just say the one thing I'm concerned about? Mm-hmm. Now, maybe not one thing. I'm concerned about a lot of things, but I've been here before. And I just kind of feel like the market's getting faked out here.
It feels that way. Monday morning.
I just kind of feel like all the Twitterverse of the world, they're all buy.
Yeah.
And this short-term pivot failed and the bears got pissed off, right? Kind of like it failed last night. The bears got pissed off. But you still got to get above 2,600. You still got to get above 2,600. And can't you see a scenario play out where 2,600 doesn't get broken and all those bullish traders just get slaughtered?
Of course. Yeah, there's no doubt.
So, and the reason I bring that up is just be cautious. I get it. The market in the last 2 days has been bullish, but it's been bullish on lighter than average volume. And it's been bullish on, to me, not a lot of good reasons. I mean, we're bullish because the trade delegation between China and the U.S. are meeting again for the 50th time in the last 3 months. We're bullish again because, Jay Powell gave the same speech he's given in the last month and a half. And by the way, Jay Powell said that they're going to be data dependent. He didn't say they're coming off their interest rate. And then if you're going to trust the data, the unemployment report on Friday was a rock star report. It was an amazing report. The economy's still doing really, really well. Even the nastiest projections on GDP in the U.S. only is 2% growth. So, I mean, we're not going into a recession this year. I know that.
Well, I know somebody who's not going into a recession. That guy who paid $3 million for that 600-pound tuna in Japan.
Did you see that? We're in the wrong business, bro. We need to go fishing.
Oh, yeah.
Got paid 300 million yen for a 600-pound tuna.
Yeah.
He can't cut up that much sushi, bro.
He's the self-proclaimed tuna king, and that's the highest price ever for the fish.
I did like his quote after he bought it, though, when he realized how much he spent versus the other record. He said, what did he say? He said, I might have overreacted.
Might have paid too much.
I paid 300 million yen for a tuna. I might have overreacted.
Yeah.
He must have money to burn.
The storylines this week are feeling like they're going to play out the same way we have for quite some time. Stuff on the Fed, implications on what they say in the testimony. The dollar's going to react to it. Anything that comes out of China. But at some point, you're going to get real movement out of these indexes, Matt, that actually has volume behind it for purpose. And it might not be till next week on earnings season. The thing about it is,
you stole my point there, bro, because I was going to say, you see all these speeches here this week? I could care less about any of that because you have earnings coming up starting later this week, and then we start getting into earnings season next week. And the first quarter earnings season is going to be very, very important to see how this market wants to go in the short term.
Yep, I agree. Some key charts.
You can say that on every earnings season, but especially with the growth discussion and especially with Delta and Apple from last week, everybody's going to be focusing on everything any CEO says of any major company regarding growth.
Yeah. Some pretty key charts that I want to take a look at. Cody put them in our prep, and let's go through them one at a time. We talked Devon already, DVN coming back up. The energy space is going to do that. CRM, Salesforce, Matt, which has been on our radar for quite some time. Breakout up here at 150 would be tradable, in my opinion. It's one of my favorite companies. That's an inverted head and shoulders pattern developing there.
Company that you and I both really, really like. Traders, investors, I mean, you can make an argument at 148, 149, but why would you make that argument in front of 150? So, yeah, 150.
Now, this is one I keep a pretty good eye on. There's no doubt about it. It's one of my favorite companies, yours as well. Anywhere up there, you could debate that little detail.
Listen, we're both biased about old CRM. There's no doubt about it. Our CEO.
On the Tackle 25, CarMax is showing me a lot of strength, KMX. There's quite a few companies on this old Tackle 25 that are showing me some entry points developing. This one has resistance right in front of us, but that's an impressive move.
It is. Again, 200-day movers. I wouldn't touch CarMax directionally, but CarMax we did add to the Tackle 25 for a reason. Fundamentally strong company, a liquid company. Investors, I mean, if you get above the 200-day moving average, I think you're good with that. If you want to look at the technical levels, you're probably talking about somewhere around 71, a close under 71. But investors aren't going to wait for swing trading technicals to make a decision on something.
No, they are not. One area of the market that is rotating a little bit here, Matt, give me a read on Bitcoin, $BT or /BTC right there. It's ever so subtle, but you have a low basing pattern developing here, Matt. I don't think there's anything that would get me to trade this. There's no doubt. But from a technical perspective, in and of itself, that is an inverted head and shoulders with a resistance right above us.
Fantastic.
Oh, a couple other stocks I want to look at.
I just don't care anymore. I just don't. I don't care. I don't care if I miss out on Bitcoin going from 4,000 to 6,000. I don't care. I don't care if I miss out on Bitcoin going from 6,000 to 10,000. I don't care. I don't care if Bitcoin goes to 3,000 to 2,000. I don't care. In fact, I've talked way too much about it so far, so I'm done.
I like it. Stock report candidates that are showing me some signs here. TDC. Take a peek at TDC. Teradata. Nice little breakout. WWE.
WWE. On the report from last week, that is confirmation on WWE. And ladies and gentlemen, WWE can fly.
Yeah.
That is confirmation on that breakout.
And about 5 from the option report, but let me just pick one here. Give me Twillo. TWLO.
Dirty Sex and Money. Wanting to break out of 100, bro.
Yeah. See, the thing about it is, guys, when we get together on a Friday and we have all the coaches there debating different picks, we always come up with bull candidates and bear candidates so that whatever happens on Monday, Tuesday, Wednesday, Thursday, we're ready with some opportunities. If you've not done so yet, make sure you go and review all of the different scouting reports over there.
Down on Twillo, because I want to say the aggressive entry was above 90, and the conservative entry was above 100.
Yep. I love it.
My point is, I don't think you're missing just because you missed out on today.
No, there's tons of movement. There's no doubt about it.
Now, wait for it to break 100, but I mean, you break out that $147. And yeah, I still think that's an opportunity.
I agree, brother. Good job breaking down the market. Sexy, yeah, Cody, I think we've got you and me here tomorrow, I believe. We're going to do some Delta Tuesday kind of stuff. You know, every day in our halftime report, we have a theme, we have an idea. Monday is our prep day. We go through all the sectors, the economic calendar. We kind of did here today, you get an idea what that's about. On Tuesday, we do a Delta trading strategy or trading idea. We haven't decided on what we want to do yet. We could do calls, we could do bulk call spreads, we could do a strategy, or we could even just do entries. Cody, you and I, let's just put our brains together and come up with something good for the halftime.
I still think the Tackle Pro members need to really focus on updating triggers and stops when things haven't confirmed off those reports.
Let's do that, Cody. Why don't we talk about triggering and stop, updates on them, especially with some of these bear retracements that were set up, Matt. I'm sure updating those would be very important.
You take Devon's stop loss doesn't need to be updated because it was the Doji Hangout Party one, right?
Mm-hmm.
But there's others that were sitting at resistance that slight upward movements. I mean, you got to update stop losses and triggers, and it's impossible for us to update those in real time. You as the trader have that responsibility to update those triggers and stops. Targets don't need to be updated. Once confirmed, those targets are going to be what they are. But I still think we all need to do a better job of that. So I think a topic on updating triggers and stops that have not confirmed, or another topic, when it says needs a doji, describe what that technically means.
Doji Hangout Party.
Yeah.
All right, I like that. We could talk about Doji Hangout Party needs a doji. Those are all good ideas. Definitely, let's do that tomorrow, for sure. I'm looking at our upcoming events here, Matt. You and we're going to be teaching our mastermind group on Wednesday for the Tackle 25. If you're out there in your halftime crew, I know I have already seen a lot of people's names come through that they've finished the course. If you've taken it or started the Tackle 25 course, just type in Tackle 25 in the chat. I want to get an idea on how many of our halftime crew are actively, starting that course, taking that course, or have finished that course, Matt. We've got a lot of good response in that by email. I've got a lot of good interaction with some of our students. And we've got our first mastermind group for 2019 coming up here on Wednesday.
Well, then why isn't it on the calendar?
I don't know. Somebody to get after, I'm sure.
Well, do you want to yell at somebody or do you want me to?
I will just politely tell them to put it on the calendar, and if they don't do it immediately, then we'll resort to.
I can yell.
Yes, that's right.
Can you make sure all of our January Wednesdays are updated on the calendar?
Mm-hmm. Yep.
All right. Thank you.
And let's see here, John. I believe I've seen you already finished it. Justin did finish the course as well.
What do you guys, for those of you who have started and finished the Tackle 25 course, what do you guys think about the changes we made to the Tackle 25 this year? Both in terms of the dirty, sexy money, dividend fireworks, poor boy covered calls, obviously the Tackle 25. And then the biggest change is I think there's two biggest changes. One is those video systems, which I personally love the video systems. Mm-hmm. But also we're going to be updating the list every quarter after earnings season. So, if you have not watched the Tackle 25 courses, Tackle 25, and there it is. Those are the courses. Now, we are doing that mastermind group, even though it's not on the calendar yet, Tim. We are doing the mastermind group on Wednesday, and Tackle 25 mastermind group, and that will take you right here to the main page, and it should show the link. As an admin, they never act like I'm logged in, but I believe it does show the link they can just click on right there.
Yeah, and there will be an email as well that will bring you back to this page on Wednesday as a part of our daily email. And if you ever miss one of these, by the way, you'll notice, Matt, they are archived. The recordings are all there. So you can go back and watch some of the old stuff.
Oh, the amount of videos that we have that people would never be able to watch in their lifetime.
Oh, I read some crazy stat the other day, that there's like 1 billion hours of video on YouTube every
it's
week
ridiculous.
Or something like that. I can't remember the interval, but it's crazy how much content there is. There's no way to keep up.
No.
You're not supposed to. You don't have to.
You're not supposed to. If you miss out on things, don't worry about it. We do them all the time. It's the same thing with the trade. So if you missed out on reading a blog, that's fine. Read the next one. If you missed out on a trade, that's fine. Go to the next one. If you can't attend every Trader's Lounge, that's fine. Attend the next one. If you can't attend every coach show, that's fine. Attend the next one. There's a lot of material we put out there at Tackle Trading, and you don't have to, don't get me wrong. We would love it if you did, but you don't have to, take everything in.
No, you don't. Focus on what you need to build
here
for
you
yourself.
when you need us.
That's right. All right. Great job, everybody out there. If you are watching the halftime report and this is your first time, make sure you like and subscribe and click the bell for Tackle Trading's YouTube channel here and get in the game. Get over to Tackle Trading. Join us over there. There's no doubt we're putting out some amazing stuff. Good job, Cody. See you and me tomorrow, young man. And good job, Matt.
I will be back on Wednesday for Hump Day, and who should we have as the guest? I want to bring on Coach M. I love talking to him.
I can do that.
Goddamn, I love talking to her.
Yeah.
I think we got some good things. In fact, we just got off with the two amazing ladies from Women in Trading, and we got some cool things planned for Women in Trading in the next month and a half, too.
Mm-hmm. Yeah.
In fact, we're going to do a Women in Trading Mastermind group in February.
I'm very excited about it.
You're not invited.
I know. I got that from the tone of our conversation earlier.
Yeah, I asked them, hey,
Rosemary,
am I invited yet? She goes, have you had the surgery yet? I said, no. I'm like, well, fine. Damn it. No, we're excited about Women in Trading and Coach Jim and Rose from Women in Trading and all the other amazing women traders over there. They do such a great job, and we're just so happy to just help promote that amazing concept, Women in Trading. Love it.
Yeah, I agree. All right, guys, we'll see you back here tomorrow, tackletrading.com. Join us then.
All right, later.